The world's $100 billion waterway is officially blocked, sending gas prices to $7 a gallon in some places. Meanwhile, the US just delivered a secret ultimatum to reopen the strait, but that deadline is only days away. I'm Michael with Sharpe Finance. Let's get into it. Let's start by taking stock of where we're at. It's already day 30 of the war. We've already had 4,500 deaths, including 1,000 from Lebanon alone, and the US has struck over 11,000 targets. Now let's take a look at the players in the game. The US is off the map here, Iran, of course, in the middle, and then the two other major players are Saudi Arabia and the UAE. Both of these countries have been hit by warheads from Iran and were not originally part of this confrontation at all, but they might join the war in the future, creating escalation as well. Of course, you have Israel to the top left next to Syria. Now let's talk about why this strait's so important. Over 20% of the world's oil and LNG flows through this choke point. So countries with a ton of oil like Saudi Arabia, the UAE, Iran, and other OPEC countries on the left side of the strait need to get the oil out to the rest of the world. That's why they're passing through the strait. Most of the oil is coming out and not in. Now, to look at the scale of how much this strait is actually closed, we can see the drop off in the end of February to early March of the number of ships that actually go through. From container to dry bulk to rolling to tanker, especially, that's our main oil guy, just an absolute drop to the point where the 6 didn't even have any oil, and every day there's sub 10 ships that actually get to go through. All right, now when it comes down to oil, we're really just worried about gas prices in the end. Of course, gas prices since the strait has closed have skyrocketed. In some places, we're now hitting over $7 a gallon. One thing to note is before this conflict, we looked at some banks' estimates for 2026 and what the price of oil would be like. 60, 58, 77, 85 at its highest by Goldman. None of these represent the actual levels the conflict has now hit. And if we look at OECD inflation projections, we can look at the US compared to the rest of the G20. That's those first two lines. The US is now going to outpace the rest of the country, the main 20 countries, in inflation. And then the following year in 2027, we're somehow going to drop 0.7% inflation, even though we've had all this high oil cost. It kind of implies the Fed is going to have to cut rates. One reason that this conflict has actually not been an absolute disaster for oil, talking like $170 a barrel, is this pipeline that was built in the 1980s. It was built by Saudi Arabia, I believe by Saudi Aramco, and it was built in the 80s, never used. It was kind of, if we ever need this, we have it. It never really ran much, did like 800,000 barrels a day, but has a capacity of 7 million barrels a day. Now, Saudi Arabia saw this conflict being a long-term issue and decided to put in the money to actually get it up and running. It has now already hit its maximum operation capacity of 7 million barrels a day, and we're just in day 30 of this. We're not even talking about the rest of the year. Now we don't have a lot of extra throughput that we can bring from the Persian Gulf to the Red Sea. There aren't pipelines just lying around ready to bring oil through and not using the Strait of Hormuz, because it is a lot cheaper to just use ships and get the water around the coast than to build out pipelines long term. Now, when we look at escalation versus de-escalation of this, we are kind of only seeing escalation on the side of the US. We're looking at already doing a deployment of 3,500 troops. We already have plans for deployment 2 of over 2,000 troops. And we're still getting quotes like this about potential ground invasions into Iran. Now, for my expectations, we're probably going to get above $100 Brent crude for the rest of the year. It's going to be sticky. There's going to be inflation. Maybe not the levels the OECD has right now, but $100 a barrel sounds like a pretty good floor. The next piece is if we get more infrastructure strikes, either by the US or by Iran on allies versus adversaries, on direct infrastructure like refineries, like pipelines, like if the pipeline that we talked about earlier gets hit, that can be a major blow to escalations in the future. And of course, direct ground war, low probability here. Now, though the US did give a 15-point peace plan that was immediately shot down, and Iran gave their counter arguments of pieces that they need and kind of immediately got shut down, there are other players trying to de-escalate. Saudi Arabia, Pakistan, Turkey, and Egypt, none of them really want an all-out Middle East conflict that expands into their regions for a plethora of reasons. But above all, they want things cleaned up too and are willing to help. Like we talked about, this 15-point plan versus the counter demands seemed pretty unrealistic to start. On the US side, immediately dismantling any nuclear facilities On Iran's side, we're going to protect ourselves from future attacks. This means having nuclear facilities to deal back damage. They want to reduce ballistic missile defense. Again, they want protection. They want to reopen the strait. They want formal, full recognition of authority and total collection over the strait. These things are not even on the same continent. Lastly, looking at the market side of it, the market is really willing to whipsaw prices depending on headlines. So when we see things from Trump like no soldiers on the ground to now we're going to move 3,500 soldiers on the ground to we're not looking on taking Carg Island to we're going to look at taking Carg Island. These whipsaws mean that oil prices can drop $7 in a day, spike $8 in a day, back and forth. And the market is really willing to price in a lot of these headlines before finding out if they're real or not. Thank you all for listening. I'm Michael with Sharpe Finance. Please hit that bell, subscribe. I'm a new channel, so I'm looking to hear from you guys if there's any feedback.